What's up? What's up? Cryptosomniacs. What's going on, everybody? And grab this link and put it into the different groups that I'm a part of. Let me first grab this link and throw it everywhere. All right. There we go. There we go. Some of these people might want to know what the hell is going on with the market. So I always try to tell everybody when I'm going live. I know they appreciate it. Some people don't give a shit. Some people do. I hope y'all are doing well. So for those of you who don't know me, actually, we'll wait a couple of seconds before we see what's going on, everybody. I'll get started in about 2 minutes, guys. Just hang tight. I just got to put this all in my different groups that I'm a part of. Shoot, I forgot my Telegram app is on my other laptop, so I can't tell all my Telegram folks. That's okay. I don't think everybody needs to know, but I do the best I can to tell everybody that I'm going live. You know, this market is filled with all kinds of traders, right? There's the good traders that know what they're talking about, and then there's the bad traders who pretend to know what they're talking about. And I try to do my best to, you know, keep aligned with, you know, those I feel are actually experienced in the market and they know what they're talking about. So for the most part, let's get started on the BTC price action here. Okay. Hey, what's up, Christopher? What's going on, man? Take a sip of my boba tea here. So, this is something that I had mocked up, and I told my group about it the other day. You know, Bitcoin is kind of stuck in this channel, right? Like, again, it's a best fit channel right here. But it essentially encapsulates a majority of the price movement that's been happening, essentially since, you know, the top of the bull market in 2017. And you could see that we're on this, you know, descending parallel channel right now. And one thing that I really did not like is, you know, how fast Bitcoin actually broke down past the ascending trend line, which, you know, was created from way back here, right? It was something like this. Let me see if I can show you guys something like that, right? You could see this line right here going, stretching up all the way. It's a multi-year trend line, you know, and it came to meet us all the way over here. And when we actually met it, you know, kind of like that. Oh, that's kind of bad. 1 second. Let me zoom in a little bit. Right there, right? You could see that we kind of just ripped right through it. We didn't even blink. And that's one thing that scared me a little bit, because typically in asset, you know, if the trend line is somewhat useful, you want to see it be respected, you know, just even a little bit. Like, even if it kind of bounced like this, you know, hovered a little bit sideways and then ripped right down, that might be an okay thing. But the fact that, you know, you see a big bearish candle just, you know, got right through that trend line, I think it, you know, says something about the market, which is that the bears in this market are quite smart. Okay, they're smart because they know that there's a decent trend line resistance, whether it's moving averages. So let's pull these up, right? So you could see that, you know, the moving average, this one right here, which is the 200 EMA right here, right? It was essentially meeting us right around that ascending trend line. And even if we took that away, right? Oh, whoops, I took away the wrong one. Even if we took the EMA and we just use the MA, which is typically used in equity markets, you know, by most, you know, experienced traders. If we took that away, we use the 200 moving average, you could see that, you know, price didn't even blink towards the descending trend line, but it did respect the 200 moving average, right? And by the way, this is a weekly chart. So again, this goes to show that, you know, the bears of this market are pretty savvy, okay? First of all, they know how markets operate. Not only that, they know how Bitcoin market operates, okay? They know exactly where, you know, some of the strong supports are. They know exactly where, you know, mining power and value is created, where miners do not want to, you know, let go of Bitcoin and they won't crush the prices right away. They also understand the dynamics of pressuring retail investors past a point where, you know, they feel like, okay, I got to cut my losses short and just dump. And I also think that these people are the ones who are heavily moving the markets up and down, especially, you know, in the CME and SIBO futures markets. Now, as I've stated, you know, unfortunately, because of the silly government shutdown, we have not had an update here on the Bitcoin positions. I'm sorry, that's butter. Bitcoin is right here. As you can see, this is the Commitment of Traders report. Okay, guys, the COT report is important because you get to understand the commercial and the non-commercial positions, meaning the smart money and the non-smart money, or the hedge fund money that's been utilizing the CME BTC futures to long or short Bitcoin, right? Because remember, you know, you can still make money in the crypto market without having to buy Bitcoin. Okay, you can just speculate it on derivatives. Okay, and derivatives are nothing but betting on the underlying asset, and in this case, that would be Bitcoin. So a person can have exposure to Bitcoin by simply speculating on the price. Okay, so as you can see, there's a lot of short positions way back in December 2018, right? Like that. The total amount of short positions outweighed the total amount of long positions for Bitcoin CME futures, okay, on this specific date range, okay? Now, I have no idea what the futures positions are as of today, because again, the government shutdown is going through right now, okay? But I've marked up our charts to show, oh, that's the wrong one. Let me see if I have it on this one right here. I've marked up our charts to show that, you know, here are all the futures expiration dates right here. Okay, so I think, what is today? Today is January 25th. So actually today was the expiration of the CME futures, as you can see right here. Okay, now in the futures markets, right, what typically happens is, you know, traders would open their positions on trying to speculate if people are, you know, going to go long or short in this market, where the asset is going, etc. Okay, their job is simply to speculate. Now, they don't gamble like, you know, like deranged people. Okay, they're very smart, savvy. They use technology. They use massive troves of data, and on top of that, what they use is money, and massive amounts of money, to move markets in the direction that they would like. Now, a perfect example that I've stated before is I think that, you know, a majority of this move right here probably should not have happened. But let's just say the fact that it did was really good for Bitcoin. However, I also think that, you know, the mark of the CME futures opening, right, also was pretty much the all-time high of Bitcoin, okay? Now, if you go back on the COT data that I showed you earlier, and you go on the historical database, right, and again, this is available to everyone, you can see that the CME data all pointed towards, you know, this next first contract on January 26th to be short positions to be open for Bitcoin futures, okay? Now, with a high of 20,000 and on 26 January 2018, we hit a price around 11,000. So basically in half, we cut the prices in half of Bitcoin in just a little over a month, okay? So those that open short contracts, you know, up here, they benefited massively, guys. I'm talking about massive amounts of gains when prices came down here, okay? Now, again, the next contract was February, okay? Prices went all the way down to 6,000. And also, by the way, something to clarify about futures contracts. Just because these lines right here indicate the expiration of futures, that does not mean that traders can only close their positions here. More than likely, traders actually close their positions right somewhere in the middle or a couple of days before the contract is about to expire. And then they move into their next position, okay, for the next futures contract. This is called rollover, okay? So in rollover, what happens is you have to know what the structure and the setup is for the trend for the next expiration contract. So you can buy a contract, you know, any time, any day, essentially, in any of these dates, and you could buy them, you know, a couple of months out into the future, right? And you get to speculate on where the price is going. Now, if you were a smart man, right, you open a short right here, okay, on the CME futures, you essentially don't really have to close your contracts. You could just keep rolling over and over and over, even till date, okay? Even till date, you can have rollover of your contracts or keep adding on. Obviously, your other contracts would have been closed, but I'm saying that your positions would have been closed. You would have accumulated profit somewhere in the middle, and then you roll over to the next contract, and then the next one, and then the next one, okay? And you just keep collecting profit, okay? And you do this without ever having to invest in Bitcoin. And that is the most amazing and scariest thing about derivative markets, excuse me. It's that you can essentially gamble on anything and everything. I mean, derivative markets are open for corn and wheat and gold and silver and oil, you know, all kinds of things. And now they're available for Bitcoin. And one thing I've stated, you know, to my group and even online is that these futures traders are some of the biggest, you know, biggest traders, savvy and richest people essentially on the planet, okay? Not because they themselves are rich, but because the companies that they work for, the amounts of money that they have, can essentially move entire markets or cripple them, okay? So what we really underestimated in crypto, especially Bitcoin, is that we did not take into account the impact that futures and derivative trading will have on the future of crypto, okay? We did not establish a proper footing of the technology. Okay, the technology itself was far behind the price. The price had far exceeded all valuations at which, you know, that the technology has evolved. So a $20,000 Bitcoin did not imply that Bitcoin is a global asset and it's usable and tradable every little place, whether it's a grocery store, a gas station, or whatever. It just meant that this is a hugely speculative asset and things are going to get wrecked real soon. Okay, and clearly things did get bad, right? I mean, the market is essentially down. Let's see how much, right? So if we market from here, say 19.8 and all the way to current prices, that's a 82 to 83% drop, right? It's pretty scary. And so what we need to do going forward into the future is establish a better sense of what exactly is Bitcoin meant for, what are we going to do with it, or are we all just greedy people that are looking to trade this asset and try to make money in US dollar and not really give a shit about, you know, what happens to Bitcoin? And that's fine. Listen, it's okay for you to want to make more money. No one is going to, you know, no one should ever knock you because you want to make more money in life, okay? But for the future of Bitcoin, you know, what we've essentially done is we've opened up, you know, the gates of hell, because these Wall Street traders are going to destroy this asset and cripple it to the ground until every person in this space, you know, essentially gives up and hands over their Bitcoin to the smart money. You know, Warren Buffett has this quote that, you know, the market is basically like a tool, okay? It's a tool that helps transfer the money and the wealth from the impatient to the patient, meaning the retailer to the smart money, right? So what you have to decide as people is that, you know, which one do you want to be? Do you want to be the retailer who's going to, you know, just sell out and capitulate, or keep, you know, speculating on price and trying to make trades in a bad market? Or do you want to wait for the bottoming of this market, wait for the technology to advance, and then start investing more? Now, again, none of this is investment advice. You are free to do whatever you want. You could pull all your money in right now, or you could pull all your money out right now, okay? It's purely up to you. Now, when it comes to my strategy, and I'll give you guys an insight on my strategy, it is this, okay? Let me take a sip of my, my boba tea here. Okay. My strategy is this. I have maybe 5 altcoins, okay? And if you come to the chat today, come join the Cryptosomniac channel. We can have a conversation about it. Again, it's free. Just go to cryptosomniac.com, www.cryptosomniac.com. I think there's a link in our YouTube video. And we can have a conversation as to why I believe these certain alts are going to have a place in the future, and why I feel like a majority of the other 95 to 98% of the alts are going to go to shit, okay? And based on that, I've written, you know, reports on certain alts. I've also collected data on correlations, on the advancements in the communities and the project and the treasury management and the team. I've done all kinds of research to state why there are certain projects that I believe in and why I am investing in them, okay? Now, Bitcoin is definitely one of them. Ethereum is definitely one of them, okay? Another big one that I really like is this right here, okay? I've spoken about this before. Let's see. I've spoken about this project before, and I've stated that I will buy Horizon in this area right here, okay? And I've been waiting patiently for a while. I think I discovered, you know, around October last year that, you know, this is a good project to keep an eye on, okay? But I didn't buy it because I knew at the end of the day we're still in the bear market, okay? And, you know, for the most part, I let my group know maybe November, December of last year, and I told them about this buy zone, okay? I have no reason to hold back from my Cryptosomniac community. You know, they're loyal members, and I give them all the research and data that I come across. All my trades, my analysis, and everything I give to the Cryptosomniac community. So if you guys want to join the community and, you know, get the same information that they're getting, here's your chance. But for the most part, this project right here, Some of the reasons that I believe in Horizon is this, okay? A strong reason is this right here, okay? Grayscale, is one of the leading, DAI companies, right? Digital asset investment companies. And they launched a trust for Horizon, among other alts, of course, right? And you could see that, one smart money like Grayscale puts their money to work. As you can see, they have $1.8 million assets under management of Horizon. Okay, Horizon Trust right here. I would rather put my money behind a project where I believe that these guys have done a significant amount of research in, and I know that I can just, walk in their shadow. And sometimes that's all you really got to do, guys. You don't have to go through all the technicals and find that one project that's going to go 100x, okay? You sometimes need to just trust that, smart money like this is making a wise move, such as, investing in a project and dedicating at least $1 million or a couple $1 million and investing. And, same goes with Andreessen Horowitz and A16Z and Pantera funds. All these funds, these are veteran Wall Street guys. They've worked in commodity markets. They've worked in equity markets. They know what the hell they're doing, guys. And I would trust them. I'm not saying that I'm going to follow every bit of their word, but I'm going to trust them when they say that, hey, this is something that you should at least look at. And when I look at this, it's a really great project. We actually had the Horizon CEO on our Crypto Soniac YouTube channel. And I asked him a bunch of questions, and I thought he seemed like a genuine person who was actually building out a project in the vision that he has. And that's all you can expect. Sometimes when it comes to investing in a firm, you have to essentially, trust the management of the firm to take this project to new heights. And I trust Horizon's founder, okay? All right, so this is one of the projects. If you want to know the other ones, come join the community. Let's go back to some of the technicals, okay? Now, here's a daily chart of Bitcoin, and I've stated this before, right? You want to look out for this 128 moving average. Keep a close eye on this, guys. If you have any daily chart that's saved, mark up this chart in a way where you know exactly where the 128 moving average is coming to meet you and meet the price. And at some point, this price will try to meet this moving average, and it will get rejected. Unless we're actually starting the next bull market, then I would suggest, or not suggest, but rather I would probably wait to see how it, moves across it, uses it as a bounce point, and then takes off. Okay, typically moving averages are used as either support or resistance levels, especially, once they flip too, right? You could see some of these points right here on the 128 moving average, where this area right here was used to bounce off the moving average, but then once it ripped through, it then became resistance twice, okay? So that's one way you want to move and utilize moving average like this. All right, let me check out some questions that we have. What's up, Icon, Eduardo, Ronnie? Ronnie, oh man, Ronnie's like, he's a veteran and he always watches our videos. So is Jeff Wheeler. Charlie Nugent, what's up, man? Look at the shorts. It's about to move up. Okay, let's check out the short. I actually checked out the shorts this morning, but I didn't see anything special. Well, let's see. Okay, so I don't think that the shorts have that much left in terms of, people to liquidate. Typically when the shorts are high, that's where you want to be able to bet against the shorts, okay? Especially in this area right here, okay? So let me show you guys, all right? So when you look at this particular area right here, say like the 37,000, contract size all the way to 40 or 44, all these contracts right here, when the shorts are getting that high, that's when you want to bet against the shorts, meaning price is going to move up. Okay. Unfortunately, because shorts are now already at the bottom, okay, I would actually assume that there's really not that many people that the shorts are looking to be liquidated. Okay, the floor of the shorts is pretty much established already. Now the floor of Bitcoin, however, is not. Okay, so when shorts are this low, okay, one thing I've noticed is we have potentially radical movements that happen in Bitcoin that really dump the price in Bitcoin, and then these shorts start slowly moving up, kind of like zigzagging all the way up nicely. And then when price bottoms out in Bitcoin, then you see the shorts just tank. Okay, so that's kind of how you would want to look at the shorts in Bitcoin. And for now, I would not really think that the shorts are something to be exposed. All right, Jeff Wheeler, the ETF are quite a ways away from being approved. Oh, I absolutely agree, Jeff. The ETF is much, much farther away from being approved than people had ever anticipated. How can the SEC ever give an approval to a nascent industry that has not even gotten a grip on manipulation, that has not gotten a grip on exchanges having arbitrage opportunities, people across the world who are essentially preying on retail investors and screwing them, through the FUD and all kinds of fake news. I just don't see it, guys. Why would the SEC ever want, something like an ETF to be approved for more retail investors to invest? It just doesn't make any sense, right? Just think about it. So anyway, going back to price, for the most part, guys, price is really not doing anything special. One thing that I wanted to note is I actually do think that this descending triangle is going to form. One, because of the reaction that we had right here on 3120. It was strong enough where I could say that even if price comes down to that same level, to 3120, I think we're going to expect a little bit of a bounce. We might go back to like 33, 3400, maybe 3500 max, and then come back down again if we go to the 3120 low that we had back here in December. Okay, but for the most part, this trend, guys, you have to look at this trend, right? It's a massive bear trend, and nothing has sort of changed this, the momentum of this market. All right, I like looking at the Heikin-Ashi candles because they give you a really good view of momentum. Okay, they give you a good view of momentum and also trend. Okay, so when I look at this market, right, and we look at the weekly chart, okay, after this high in 2018, look at how many red candles there are in a row, and look at how many green candles that succeed those red candles. For every one red candles, there's at least, for every one green candle, there's at least 2 to 3 red candles for all of 2018. I would probably say even more. Okay, for every green candle, I would actually say that there's at least 3 red candles. Okay, and this is how you look at and denote the trend and momentum of a market. All this looks to me right here, especially from the point of Heikin-Ashi, is a rollover, looking to be exposed, and just rip right through. Okay, I'm not suggesting that Bitcoin prices are going to fall tomorrow. I think the fact that we went from 6,500 all the way down to 3,120 in less than, 2-3 weeks, says a lot, right? We got cut half in 50% in half in less than 2 to 3 weeks. So if we're going to fall so hard, you would expect the prices to, gain a little bit of an equilibrium, move sideways a little bit, give some fake outs to the upside, but then, dump down again. Okay, this is typically, what happens in bear markets. Okay, you try to trap and screw as many people as you can, because again, as Warren Buffett and many, smart traders and investors have said, the market is nothing but a tool to be able to transfer wealth from the impatient to the patient. That's essentially what's happening here, guys. If you wait patiently in this market, you can be, the person who uses the market as a tool to transfer the wealth from the impatient, those that are novice and amateur traders, into the pockets of people like you who are waiting patiently on this market to give you the proper signals. Okay. One proper signal I could say is this. Okay. So if on the daily chart we look at the 100 or 128 moving average, if the price starts to creep back up, first thing, it's got to get over this level right here. Okay. 3670, it needs to get over. Next level is this line right here, okay? This is the descending trend line that we've had from way back here, end of November, okay? And that's essentially just holding the price down. So these two markers, once price gets past this, then you can look for these two moving averages to meet the price, and then probably face resistance. So price will probably, if price moves, it'll hit these moving averages and then come back down again, more than likely. Okay, because unless price starts to break past these moving averages, this would imply that the market is ready for a turnaround, especially if price gets past the 200 moving average, which is probably much higher. So let's see where exactly that is right now. Let me turn off 128 and 100. So the 200 moving average is currently at $5,600. Okay, so if price starts to make, higher lows and higher highs over the next few weeks, and it starts getting past, 5,000 or 6,000 maybe, that's probably the end of the bear market, okay, and probably the start of a new bull run. But for the most part, you have to keep in mind that currently prices are at $3,500, and they've been at $3,500 for almost 2 weeks now, okay? This is not a good sign, because the volatility is being sucked out of crypto. And the average retail investor is essentially, letting go of their crypto and leaving the market. It's not a good thing for the retailers, but it's a great thing for those, either in the smart money markets or the big whale traders. They're going to keep accumulating, because that's what they prey on, guys. They want to, gather as much of a share of the market that they possibly can, and then they themselves will move the market up and down whenever they choose to do so. Okay? Markets do not move because of average retail investors like me or you. They move with the smart money and, the institutional money decides they want to move the market, okay? And they decide when they've collected enough of the market share where they can maximize their profits, okay? All right. Another thing to know is Ethereum, okay? ETH is in this sort of falling wedge kind of thing. But again, guys, one thing I've stated is I am not looking to trade alts like Ethereum unless I'm dollar cost averaging. I would not be trading this on a short-term basis, because with Bitcoin being so volatile and the fact that it dictates the rest of the market, it will destroy Ethereum, okay? So when Bitcoin goes up by 5%, Ethereum goes up by almost a factor of 2.1. It's just something that I've noticed. Same thing on the way down, okay? When Bitcoin goes up, or when Bitcoin goes down rather, by 5%, Ethereum will also go down by a factor of 2, okay? Multiplied by, how much Bitcoin went down by, okay? Just something to keep in mind, okay? So you do not want to be trapped in an alt trade when Bitcoin is already looking so weak, right? Which is, it definitely is, right? It's definitely not looking strong, right? It's more so neutral in this area, because we're stuck in this critical area right here between a tough resistance and a somewhat tough support. Okay, so this green and this red line is where we're stuck. 3670 is our first decent size resistance area, and 3450 is our decent size pool of demand. Okay, now as you can see, when price poke past 3450, I had mentioned to our community that this is essentially a test from the bears. Well, this is one of two things. Okay, so let me rephrase that. It's one of two things in that the bulls are either testing this area to ensure that, hey, this is not a glass floor that's not going to just break right through. And we may be ready to, start forming floors in this particular asset. So this is one floor. Then once price moves up, they'll establish this as a floor that's, sort of unbreakable. Then they'll move up, and then they might make 4,000 another floor. Okay, this is how you establish supports. Okay, vice versa, this could be also a trap from the bears where a candle like this was printed. Okay, so this hammer-like candle right here, to gauge the depth of the bulls in this region right here. Okay, why do they want to know the depth? Well, it's simple. If you want to dump prices from current value, which is 3560, and you want to break past this floor right here, 3450, you have to figure out how much Bitcoin remains in this region right here. Okay, in this area right here, how much Bitcoin is there where buy orders are sitting or bulls are willing to defend this area? And if there are enough bears that can absorb all the bulls' buy orders, and they could still, have enough Bitcoin to keep dumping the price further, what will happen is this, one of two things, okay? The bears will suppress the prices deeper and deeper, okay? The bulls are buying in this case, okay? So the bulls are buying and the bears are selling, okay? Now, what's going to happen is the bears already know that, okay, it's going to take, say, 5,000 Bitcoin to dump past this level. Now, all 5,000 is absorbed by the bulls, okay? So the demand absorbs all 5,000 in this area right here, okay? But then the bears have a hidden arsenal, which is that they have another 5,000 Bitcoin, okay? And they're going to keep dumping and dumping, right? They're going to keep dumping and dumping. And then eventually the bears who bought up this area, once price hits, their stop losses, like that might be here or here or here, right? They'll probably be spread out, okay? No, all bears and all bulls, they don't just collude and they don't all know exactly where to buy. They kind of are around the same range. So when the bears keep pressing the prices down, right, and the bulls have already bought this region, their stop losses are going to hit. And once these stops hit, what the bulls bought, the 5,000 Bitcoin, this will tank the prices even deeper because the bears are dumping, and now the bulls have also given up. They've given up their position because they're saying, oh shit, this thing is not going to go up. Well, I mean, I'm just going to get out of my position while I'm only at a 5% loss, right? Because they know that if this support does not hold, I mean, the next strongest support is all the way down here, right? And that's a pretty steep drop for anyone, okay? So if you buy here, right, and I mean, that's a 10%, a 9% drop, okay? And that can happen in a flash in crypto, right? So why would you want to be a bull in an area where you're about to get crippled if price is already dropping, right? So that's how you think of supply and demand, bulls and bears. All right, sorry I keep talking, guys. What are the questions? What do you think about BACT and its impact on BTC prices? So BACT is going to be really interesting. FZJ80. I actually think that BACT is doing something really unique for the crypto space. But again, this is all, derivatives, right? Derivatives don't help the underlying asset. They help, build the gambler's paradise. They help Wall Street and traders and investors invest which is, I mean, you could make the argument that, you know, of course, investing in an asset will give it more money and liquidity for it to use for its own growth. But Bitcoin and majority of these companies are not like your typical, you know, equity markets, right? They don't have, you know, debt, and they don't have, you know, huge R&D departments that require massive sums of money to, you know, develop products or services or enhance their existing platforms. They operate far differently. Okay, so I would argue that, you know, backed, even though for the derivative markets and it's good for investors, I really don't think it's going to be doing a whole lot for the crypto space. Long range crypto. So are we going below 3K? You know, to be honest, I'm actually leaning towards that. I really don't think that prices at $3,500 are going to hold. However, if prices were to hold, the only way we would know, guys, is by something like this. Okay, and I've mocked this up before. So let me show you guys what this is. Okay, so this is called a Wyckoff accumulation schematic. Okay, so I drew this up a little while back, and I wanted to show you guys exactly what it is and how it works. Okay, so this schematic right here is something developed by Richard P. Wyckoff. Okay, he designed this because he tested years and decades of market data, and he realized that when smart money or institutional money is looking to position themselves to buy an asset or to accumulate a particular asset, the way they operate is this way. Okay, they have, you know, tests like these, preliminary supports, spring test, automatic rally. Again, you can look at my CryptoSomniac TradingView channel, and you can look up the entire meaning of this schematic right here. So basically there's phases, okay? Phases in which a institution decides that they want to get into this asset. And how they get in is through, you know, many weeks and months of accumulation, okay? And they have different tests to ensure that there's not, you know, retailers who are basically like, you know, to them, retailers are like barnacles on their big boat, okay? They don't want any fucking barnacles. They want the boat to be clean, so when they're ready to sail, they don't have any extra weight, okay? And to them, retailers are extra weight. So what they do in this schematic right here is they try to acquire as much of the asset as they can in a long period time span, and they have different tests to ensure that there are not other retailers or other people in the accumulation period that they've had that will hold them back from pushing prices up or down, okay? There's accumulation schematics, then there's also distribution schematics, okay? And these basically ensure, you know, how the institutional and smart money are going to make their next move. And so going back to Bitcoin, if we were to assume that Bitcoin is in a accumulation mode, okay, prices should not dump past, I would say, $2,500. Okay, but that should also be, you know, farther down the line, probably like, you know, a couple of weeks, maybe a couple of months later. Okay, I've marked this for July 2019 as a spring test, because spring tests are important because, you know, they give a false idea that prices are about to tank, but then prices just reverse on a spring, because this is where, you know, all the retailers are selling, and this is where all the smart money is buying. Okay, they're buying all your shit. Okay, all right, hope that helps. What would you have to see in BTC to go long? I would have to see long range crypto. One of two things: this schematic right here playing out for extended period of time, for at least, you know, staying in the $3,000 to $4,000 range for at least 3 to 6 months would give me a good idea that we might be in accumulation. Or if we just capitulate on the way down and we take prices towards maybe $1,500, anywhere between $1,200 to $900 is, you know, my sort of final drop from BTC. Okay, I would think that would be permissible. Anything lower than that, and I think we're, you know, kind of in deep trouble. So I marked this area up right here. This block right here is an indication of the final drop of Bitcoin if it does happen. Okay, so you could see that it's between 1,200 and 1,900. Okay, another reason why is because this area right here has not been tested as a support and resistance flip. Okay, typically you want to see that. So as you can see right here, right, this was once resistance, and then this area right here was tested as support. Okay, let me try to zoom in on that. You can see that right there, right? That's resistance once. See, it was tested as support. This area was resistance right here, and then it was tested as support. Okay. All right. So, you know, that's one way to look at that, where you could say that capitulation is one way, accumulation is another, or if Bitcoin starts moving past, say, 6,000, maybe even, you know, $5,500, I might be convinced that, you know, this might be the end of the bear market. So one of those three scenarios, okay? So if you want to make a note of that, or you know, come join the community discussion, free lounge in our Crypto Somniac channel, we could talk about that some more. All right. Let's see. It's gonna show you guys something else. I'm spacing out right now, so I don't know. But it is Friday night, guys. You know, I do want you guys to spend time with your friends, your family. Don't worry too much about the markets, guys. The markets are always going to be here. Okay. Oh, let me answer Ronnie's question real quick. Ronnie, what are some reasons why you think 1900 could be a low? Volume by price support is low there. I totally agree. In this particular region right here, I mean, you know, there's really not a whole lot of support, but it is one of the larger phases of this, you know, big up move that happened, which was that parabolic move. But it was right before that, right? So this range right here was like a nice 45-degree angle, okay? But then after that, I mean, over here, from here onward, we just went ballistic to the upside. And typically, what I've seen in markets and what other researchers have, you know, seen is that when markets, you know, take off in a parabolic move, oh, sorry about that. When markets take off in like a parabolic move, they typically retrace that entire move and a little bit below that, okay? And that's why I think that anywhere between 1,200 and 900, which was just right before that parabolic move, I would say that's an area where I would think Bitcoin would have a decent amount of support, because those who wanted to take this market to, you know, sky high heights already did their job, and they've pretty much left the building. But those that stayed, you know, true in this area right here, I think they're still holding on. Okay, and I don't think they're gonna let go anytime soon. And there, you know, when it comes to supply and demand, there's only so much supply in Bitcoin, right? I mean, where are you gonna find people to sell, right? I mean, of course, you can make the argument that, you know, institutions are definitely looking to buy and dump prices further, which they definitely can. They can have huge sell walls and just keep dumping the price over and over, even while they themselves are at losses. But I think prices have taken enough of a beating if prices, you know, come down to this level right here, 1,200 to 1,900. All right. Jeff Wheeler says, remember, they also have to catch up with all the work that they have missed, so things will lag even more so for the short period. Agreed. All right, folks, that's all I have. One last thing is this monthly RSI that I wanted to show you. Really keep an eye on this. So there's two things for you to keep an eye on, or well, three rather. One is, you know, the descending parallel channel that we have right here on the weekly chart, right here. On the daily, we have the 128 moving average. So turn that on for yourself, okay? on the daily chart right there. And then on the monthly chart, let's see, actually we're already on BLX. On the monthly chart, like this, I want you to mark up your RSI to follow this level right here, okay? So way back in 2015 bear market, we hit the RSI at this current area right here. The bottom hit right about there. And you could see, you know, Bitcoin is right in that area for the RSI, okay? So once it starts, you know, breaking through right here, guys, we have a long way to go for the bottom, okay? Which is the oversold territory, okay? So keep an eye on this area for yourself, and you know, trade wisely. All right, folks. That's pretty much all I have. You know, stay smart in this market, guys. You know, markets are always open. There's plenty of money to make in this market. You know, so you know, be smart, learn technicals, learn fundamentals. Don't go off of what the, you know, average newbie trader is trying to teach you on crypto Twitter or Reddit or Telegram or whatever. Just learn something from yourself. And even if you think that you disagree with me, that's fine. I'm happy to have a discussion with you. I've been doing this for 11 years in the equity markets, and I'm still learning, guys. I'm learning every single day. So I have no problem when someone criticizes my work, because my feelings aren't hurt, okay? I just know that, you know, I'm human and I'm going to keep learning. But you should also know that, you know, when someone has been doing this for quite a while, just a little over a decade, you know, he might have something worth of knowledge that, you know, you may want to listen to. All right? Well, that's pretty much all I have, guys. Y'all take care. Come join the Cryptosomniac Moon Lounge. You know, check out our the Crypto Hopper, which is the bot that I use. You know, sometimes I like to just leave it on at night. Sometimes it gets me like, you know, 0.5%, 1%, which is like $5 or $10 here and there. So it's easy money. The link is, you know, right in our description. So yeah, that's it, guys. Yeah, I totally agree. One man army. Invest in yourself. Absolutely. I love that answer, man. All right, guys. Y'all take care. Much love, and I'll see you on the next one. All right. So let me turn this thing off. Uh-oh. I don't know why this thing's not turning off.